Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's take a look again at the gold market. The gold market situation becomes more interesting and a bit more clear, since on the monthly time frame market has given us a very significant and important pattern that could give us in fact the direction and the approximate price action for long-term perspective. And I think that it will be very useful if you will visit our forum and read the monthly analysis and analysis of the weekly time frame, because this will let you to understand clearer what is going on currently on the daily time frame and what we could expect in fact on the gold market in the nearest future. Shortly speaking, in the nearest perspective, it's very probable that we will get some sort of the range action in the long-term range that stands on the weekly time frame by some reasons that I have specified in the text version of the weekly research. So market very probable will significantly exceed these lows, because price is extremely oversold on the monthly time frame, and that will be the serious barrier for market to continue moving significantly lower. Market could form some kind of the wash and rinse of some behavior around this low, but it will be very difficult to continue move significantly below these lows, at least technically. Well, fundamentally, maybe the factors that have made impact on the market previously in the previous 2 months, this significant flow of the money between the safe haven assets as the US treasuries and the gold market to some risky assets due to some reasons. We have talked about this in our fundamental part of the research, could in fact take some impact on the market and could force it to continue move a bit lower. We do not know that this could happen, but speaking about purely technical moments, pure technically market will have the serious problems to continue move below this low, the 1320 area. And sometimes happens when market shows the significant plunge down, market stands in the range of this move for some long period, because investors and market trying to reassess what has happened to accommodate to current new range. So understand what is going on the gold market. That's why market stands in some range on the weekly time frame, and that probably could lead to some range trading for the long period. At least, as I said, 1320 area will be significant barrier. So you can see, despite this low, this will be also the monthly pivot support one for June. So that will be monthly pivot support. Well, speaking about the short-term perspective, currently we see more and more signs that market looks very heavy, and this bullish action that has started very fast and funny, as you can see, this was nice bounce to the upside with this bullish engulfing, has turned to some very lazy and choppy and sloppy price action. As you can see, small candles, deep retracements, long shadows. So this action doesn't look like the upward continuation is here, and I think that there are less and less chances still hold for double bottom pattern. In fact, this looks like the retracement. And in current environment, especially when you see right now that market has formed bearish engulfing pattern right at 50% resistance of that swing, also market stands very close to the daily overbought, it's very difficult to make bet on the upward continuation. At least currently, since we have clear bearish pattern right at the resistance, we can't think about long entry until market won't erase it. Other words, until market will not move higher than 1420 area. Only if market will erase this pattern and continue move higher, we could return to speaking about the potential long entry. But until this happens, it's better to be focused on this pattern. Technically, this is easier to trade, and that's in fact the foundation for the short entry. We have the context, we have the bias for taking the short position. Otherwise, for taking the long position, it's now will look strange and curious, because in fact there are no context for that. The one thing that a bit worries me here is that if you take a look at this ABCD wide pattern, you'll see that 618 extension minor, the minimum extension of this pattern stands slightly higher, around 1440 area, but it stands beyond the daily overbought. That is the risk for this bearish acceleration to the downside, because in most cases market usually reaches at minimum the 618 extension. That's a bit worries me, but currently just impossible to say will market hit it or not. Probably we should be focused on the intraday action to understand that, and some clarification should come in the nearest trading sessions, maybe on Monday and Tuesday. Well, on the intraday charts on the 4-hour time frame, we have the significant moment. Recall that on Friday we have discussed this line, this support line, and we said market should hold above this broken line to keep valid the upper context, to keep valid the bullish sentiment, but this hasn't happened, because here you can see market has tested multiple times, broken through it, retested. There was our recommendation to enter long, trying to continue move lower and failed. Again, returns right back to this area, but failed, continue move lower. Also, by this action on Friday, market has broken through this support line. In fact, this splash up looks like the bullish trap, as the failure breakout of the triangle consolidation. That looks like the pennant on the daily time frame. That also adds to the bearish context. Trend has shifted to the bearish side on the 4-hour time frame. Hence, we have the bearish pattern as the bearish engulfing on the daily right to resistance. We have the failure of the upward breakout of this consolidation here. Thus, we could be focused only on that swing. From the trading point of view, that is just perfect, because we do not need to take into consideration some choppy action, some multiple swings. All that we have to do is just be focused on this move down, because it gives us all that we need for trading in the beginning of the next week. On the hourly time frame, what we have, that is the swing down of this bearish engulfing pattern. That is the point of invalidation of this pattern. That's the first moment. Second moment, take a look, that is absolutely perfect and nice looking thrust down. That is suitable for Jordan directional pattern, as double repo pattern, as bread and butter pattern. And this pattern could be, any of this pattern could be suitable for as scalp traders and for the positional traders, because if it will be double repo buy, scalp traders could take the long position. In this case, the most probable target will be the monthly pivot point that stands around 1405. This is June pivot point, and this hasn't been tested yet. So if this will be short-term reversal double repo pattern, then retracement probably will be high. And as you know, the minimum target of the double repo, the 50% resistance of the whole thrust of the double repo, and that's precisely now the level where monthly pivot point stands. These positional traders will have to wait when the double repo will work out and search for the sell short entry around this area, around between the 1505 1507, that's 618 resistance and monthly pivot point. If this will be the bread and butter, as scalp traders and as positional traders could search the possibility for short entry, and if this will be the bread and butter, then the probable level to watch for is an area between 1395 14 even area, because that is the weekly pivot point of the common week, that is the confidence resistance. If it will be the bread and butter, then market should start move down somewhere in this area. Okay. Also, keep an eye on if market will start and will show some extended move to the upside. Keep an eye on this level. That is the weekly pivot resistance one that stands around 1415 area. Why it's significant? Because we know that when market stands in the bear trend, weekly pivot resistance one should hold any retracement, any upward retracement. Because retracement to the weekly pivot resistance looks as retracement and treated as retracement, not as the reversal. And that is reasonable action when the market shows the bounce within the trend. But if market exceeds the weekly pivot resistance one, this could be the first bell that the bearish sentiment, short-term bearish trend is under question and under the hazard of destruction. And this will happen even before invalidation point of the bearish engulfing pattern daily time frame. So if market will show move up and will move above the weekly pivot point resistance one, don't be short. that will be the sign that the context, bearish context, stands and dangerous. That's two moments to watch for. So you can see this, in fact, hourly time frame gives us the significant advantage and makes our life easier and let us to trade with the clear patterns. So that's been said, we have the bearish patterns on the daily time frame. We have the context with the directional patterns on the hourly time frame. That's probably will be a very interesting week for the gold. Let's be focused on these levels. Let's be focused on the patterns that could be formed with this thrust down, because that could be really great assistance for trading on the gold market in the coming week.